Good morning. It's Market Day Report. I'm Tony St. James from CattleCon 26. Well, markets are open. We'll look at the corn market to start the thing. And, corn has been higher 2 straight sessions. Can we make it 3? By the way, right across the street is where the Nashville Predators play hockey. No hat tricks last night, but corn could see one if we close higher. March contract tick higher, 429 3/4. We're unchanged on the December, now a tick higher at 457.5. Could be trading some of what we saw from the weekly export sales report, or maybe we're trading a presidential tweet. Yeah, beans up 11 1/4 on the March. 1103.5. September still stuck in that $10 range, 1088.5. It's 4 3/4 cents higher. Now to the wheat market. Wheat trying to turn things around. Will we do it today? Well, Chicago's trying. New crop half penny higher, 547 3/4. And Kansas City, new crop here is the July contract, and we're watching the July try to follow on the heels as well. How about over to the cotton market? And cotton futures at this point have been lower throughout most of the session, and we're still lower here today. 61-cent cotton in the March. Let's go to Dodge City. Brady Huck's with EmpowerAg Trading. And Brady, let's start on the soybean side, simply because this time of year is usually when we kind of see a cliff, don't we?
Definitely, yes. This is that time of year where South America beans typically come online. We've got harvest happening down there. So that timely tweet yesterday we got from our president about the potential for China to come to the table with some more bean purchases really sparked the market, and signs of life in the grains. It's great to see this market move higher like we know it can do, but kind of feels like we're pushing the market higher versus pulling it higher. So beans are up 12 cents here out of the gate again this morning, so good to see some continuation of that move and retracement of the kind of pop and a drop that we saw yesterday. But Milo was also on the books here for our weekly. We had the weekly export sales data. Beans did post a marketing year low for their weekly export numbers, so that timely tweet again comes at a good time. But Milo did post a solid week of exports. My Kansas friends like to see that, and we hope that it results in some basis opportunities out there for guys with a lot of Milo in grain bags and on-farm storage right now.
I'll throw one more thing in here, is if that U.S.-India trade deal opens the door for more ethanol being exported, could that be a positive for both corn and for sorghum or Milo?
It's certainly, more demand is a huge thing, and exports would be a great thing for us. We're very much kind of running at top end capacity for our ethanol grind. So I question how much more upside there is until we get, an E15 type of deal or some export stuff going.
Yeah, and that's the importance of getting, whether it's congressional approval of that year-round E15, not through the EPA, because that can change with any administration, but that's what they're set to tee up later this month, year-round E15. If that happens, gives you a little bit of clarity moving forward. And if we've got that, maybe we see expansion in ethanol plants. Okay, Brady, I'm talking a lot. How about we take a break, and we'll hear from you on the cattle side next. This is Market Day Report. We're at CattleCon 26, downtown Nashville. Glad you're with us. If you get out here, make sure you drop by booth 606 and say hi to us as you come by. All right, speaking of saying hi, let's say hello and good morning to the markets. The cattle market, live cattle futures up and trading, and we started down in the red. 237.50 on the February. That's down 302. April 337 lower at 238.42. We're seeing losses on the open across live cattle. Feeders. Here's how we open the morning. The March at 365.92, down 4.15. $4 lower on the April at 363.50. Hogs were lower yesterday. How about today? We start in the red. February down 55. April, the only contract higher yesterday, gives that back. Dollar lower right now. Deferreds are in the red as well. So a little bit of a turnaround, if you will. On a Thursday, Brady Huck is with EmpowerAg Trading in Dodge City. Let's talk cattle for a moment here. What are you watching here in the cattle market?
Proteins have certainly had their time to shine here the last month. They've been, winning for quite a while. So a down day today, kind of a nasty open here on the gate with feeders breaking $6-7 on the open. Fats down there as well. So I don't know. You can't be surprised by this type of volatility in this market. We've seen it in other markets, silver, gold, etc. But when the funds are long, this type of volatility can't catch you off guard. Markets, they can come and they can go. But right now, the cattleman, he's still getting paid, but they've earned it the last few weeks dealing with the weather that we've had out here in cow-calf country. But we shouldn't be surprised that we get paid either, too, though, Tony. It's nice to just get paid every year, and we shouldn't be surprised that we actually do get paid. So, took out last week's high earlier this week, yesterday, giving some of that back. Good start to the week. There's some gaps above us on feeders and fats. Everybody's kind of eyeing those same gaps. We've clawed back most of that October sell-off. We sold off $70 to $80 in feeders in October, and we've clawed most of that back. So the deferred markets are looking attractive for some risk management. I want to be bullish this market on the proteins, on the cattle, but I want to use strategies that give me upside, but I'm also going to defend the downside in that market too. So funds are long. You got headline risk out there, Tony.
Hey, Brady, anytime we're talking about higher prices, we start working into the conversation, will we see demand destruction? Will we see, a shift out of that sector, if you will? Whatever it is, whatever we're talking about, whatever commodity. We're not seeing that when it comes to the beef sector, and I would challenge that it's probably tied back over to the fact that we're grading more choice than we are select. And so a pullback in the select box, maybe that's simply because consumers not really going for the select. Am I off base there?
Right. Yeah. I think select's like 10% of the total, volume of cutout, and we're grading a lot of choice and, record high amount of prime beef. And really, there's no substitute for American beef. We can import, some lean product and some grass-fed type product, but consumers have a huge appetite for American beef. There's no replacement for it. And that's good to see. Good to see.
Well, it's good to see you. Brady Huck is with EmpowerAg in Dodge City.